All right, hey there. Good morning, everybody. It is a few minutes after 11 a.m. Central Standard Time here on Tuesday, October the 4th, 2022. I'm Chris Frakes with Texas West Capital, coming at you live here from just north of Houston, Texas. Always great to have you all checking in. We got a lot of stuff going on, not just in the U.S., man, but, everywhere else we look. We've got Japan, we've got the U.K. What else do we have? We've got Australia, right? These central banks doing things, right? And these things that they're doing have U.S. investors thinking maybe the Fed's going to pivot sooner than expected, right? Now, you guys already know my position. It's the same, exactly as I talked about at the beginning of the year, what I expected into the summer, through the summer, and now. So now we get to see if it does continue on, right? Excuse me. And, we've got a lot going on. If you watch bonds, the rally with bonds, you may have you thinking that, that bonds are signaling that the Fed's going to pivot. And what do we mean by that? Well, we just mean that people who are trading in bonds, their actions, the way in which they're trading bonds, would suggest that in general, they believe that the Fed will be pivoting, right? Well, the question is, if the Fed doesn't, what happens to the rest of the world, right? Because, everything is so interconnected with the U.S. now. We think about the Great Depression back in 1929, starting from there, coming down, right? And at that time, the U.S. was not as integrated, as deeply integrated with the rest of the world. And what I mean is the rest of the world wasn't so deeply integrated with the U.S., right? Now, U.S. is the world reserve currency, global finance, it just all circulates around, right? So whatever's going on in the U.S. translates into how the dollar does, right? Of course, with what the Fed's doing and whatnot. And that affects then all these other countries throughout the world. And so if the Fed isn't careful, then their actions, potentially affect quite negatively the rest of the world and could lead to some great global depression, right? I've talked about that. We'll see. We'll see. Is the top in, as we've been talking about, as we were looking at over the last few years coming into this, or do we still have maybe one more final push? And I don't know. There's a lot going on right now. I'm not as sure as I was, say, 2 years that top was coming in 2 years ago. There's a lot going on right now that may suggest that we've got one more push higher to really kind of just kill off everything, on the next drop on that. So we'll talk about that a little bit today here and some of those other things going on. How are y'all doing? I see Raven Moore is here. What's going on? Data's here. Aramis, good morning, man. Thoughts on the UN requesting the Fed to stop rate hike? Well, there we go, right? Basically what I was talking about. Again, what the Fed does is going to have this extra effect on the rest of the world, right? Because everybody is so, the dollar is so integrated into the rest of the world. And the rest of the world is so global as far as in terms of, production and imports and exports and everything, right? I mean, man, I think the Fed's got a lot more pressure to pivot than what, they may let on, worldwide. Because if the rest of the world, if what the Fed does causes the rest of the world to, some big worldwide depression kind of thing going on, that's not good for the U.S. The Fed can say all it wants about, bringing down inflation, all this, but, in these kind of countries that we're in, right, these kind of monetary situations, it's all debt-based, right? Which means deflation is very very bad for the way in which all credit and everything's set up, right? And that's what we'd be looking at, through a depression. We'd be looking at deflation, right? And so if you're talking about worldwide deflation, I mean, that arguably hurts the Fed's mandate a lot more than higher prices might be. But we always talk about the Fed. The Fed is not. It's never proactive. It's always reactive, right? And so the things it's doing now, people are like, oh yeah, look, it's doing all this and it's causing these things to happen. There's things, slowdowns and whatnot. But Is it really? Or is the Fed just, kind of late to the party and it was already happening? I tend to believe that that's what's going on. The Fed can exasperate the problem. It can make things worse by its actions. It comes in all heavy-handed and whatever. What do they say? If you're a hammer, everything looks like a nail, right? So I think there's a lot more argument for the possibility that the Fed pivots more than it doesn't. So we'll see how it continues to play out here. We've got what do we got right now? Like I said, we got bonds rallying. We had U.S. manufacturing activity decline to the lowest level, that ISM report there, since May of 2020. That was right after the pandemic stuff happened there in March, right? We've got OPEC Plus really kind of, mulling over a potential really hefty production cut to prop up prices, right? But, come on, guys. The prices have been rallying since May of 2020. Those May contracts, right? April contracts, whatever they were there, coming into May, right? Where we had the negative print. We were down $42 on WTI. We were negative $42 a barrel at one point. We closed, negative. But, first time ever, right? And so we've been rallying ever since then. That's what, almost 2.5 years now? Getting near there? Yeah, we're going to pull back. But, OPEC wants to go out there and do whatever. It doesn't really affect it though. Again, I think these things that have these news events are just, really just knee-jerk reactions, right? And I'm going to go into more on this, by the way, guys, with the masterclass I do next week. It'll be on Monday at that Web3 Expo. So if you guys are going out there, send me a message. Let me know, man. Maybe we meet up, okay? But we're going to go a lot more in depth into this idea that news is already in the charts and how to understand that and how to prepare for it so that you can get in, prior to prices lifting off or declining or whatnot, right? What else have we got going on here? We got U.S. job openings. They saw their biggest drop during August. It's the biggest drop. Not just the biggest drop. It's the biggest drop in nearly 2.5 years. I think it was April 2020. Since then, again, talking about right when that pandemic started, right? So the U.S. Job openings dropped 1.1 million to 10.1 million. Okay, so they were 11.2, dropped to 10.1. July was revised down from 11.239 to 11.170 million, right? So, we've got all that. We've got, I mentioned the Royal Bank of Australia, right? They only hiked their interest rates 25 basis points. Everybody was expecting 50, right? We've got the UK, who is talking about unlimited quantitative easing, right? They almost had that collapse with everything going on. So, you had the Bank of Japan intervened, right? What did we say? Something like 22 billion to prop up the yen because it's hitting 50, 60-year lows against the dollar, right? So you've got everybody else kind of joining there doing this. I don't think the Fed, the Fed can talk big, but I don't think they've got a lot of reason to continue doing what they're doing. And so, that just aligns with what I talked about back in January, February this year of how I saw this year kind of playing out as far as interest rates go. And so we'll see. We've got CPI and unemployment coming up, right? And so we'll see how those two things turn out. If either or if both of those come out lower than expected, the Fed really doesn't have a lot of support for pushing higher. Maybe depending on how those numbers are, maybe they can squeeze out one more 75 basis point rate hike, but I'm not so sure. I think we probably get a 50 basis point, right? Speaking of which, where is there's a Fed tool here. We've seen the market here. Well, they're up a little bit now. They're up 64.2. They were 58% yesterday. So this is 64.2% for a 75 basis point rate hike, 50 basis point rate hike over here at 35.8%, right? So we'll see how this continues to play out in the probability here as we kind of get toward that. But hey, listen, you can join us here at howtotradetowin.com. We'd love to have you there. A lot of amazing people. Like I said, well over 300 hours of educational video content now. 3 live streams every week. Monday, we do an hour for our Tier 3 members of Wyckoff. Wednesdays, we do an hour of price action. And then Thursdays, we do an hour of Elliott Wave. So everything we can do there. Plus, we've got 50 plus day recordings of different rules-based strategies to enter on trends and whatnot. It's a lot of times as traders, you get in there and you're kind of scared to get out because you're like, oh man, I got lucky to get in on this. And what if I get out and it keeps going up? How do, I can't get in, right? Well, we got probably like 50 plus different rules-based strategies there to help you get back in. So that way you can feel a lot more confident in taking and locking in those profits and getting in for another push up higher, right? So anyway, we'd love to have you here, man. We're just have a good time, I think, anyway, right? Michael Williams, good afternoon, sir. Good to see you there. But yeah, so thoughts on the U.S. requesting the Fed stop rate hikes. I mean, here in the U.S., we love to hate the UN, right? I come from a military family. I don't have a lot of respect for the UN myself. But, what we see with them doing that again, it goes all to what I was saying there with how much the dollar is a part of everything that's basically going on in the world, right? Like it or love it, hate it, whatever. I don't care about personal feelings. I'm just talking about this is the way it is, right? I think a lot of times we get caught up in this idea of, oh, well, I don't think it should be that way. And so then we ignore the fact that things are what they are. We just think, oh, well, it should be another way, so we're going to think this other way. Yeah. Are you out there to make money, or are you out here just to try to, complain that the world isn't working the way you want it, right? And so I think, that's a lot in there, right? I mean, we've got all that going on, world reserve currency, right? We've got everybody's imports and exports, all kind of, there's just this global, it's globalization, right? I mean, it is what it is, guys. It's the world we live in. And so I think being a trader really means that you have to forego this thing in your head that says, I think things should be this other way, right? Because it doesn't help you in any way. I mean, you can sit there and say all day long, man, I think that it should do this and it'd be better if it did this. Well, who cares, right? You can't change that. And as long as you trade with that mentality, you're going to constantly be taking trades you shouldn't take and missing trades that you should get into because you're constantly thinking about what you think it should be, right? Does that make sense? And I mean, what do you do for yourself then, right? It just makes life hard. And I know you guys go through this because I deal with this all day long, right? Unfortunately, a lot of the nonsense I get online, the messages I get online are just from idiots, right? And I say that because they're not respectful. They're just like, they come off calling names and whatever else and being, just acting stupid. I understand if you have a wrong way of looking at things, and I don't have any hatred towards somebody like that. I don't have any, malcontent, any feelings of bad, toward them. But man, when you think incorrectly, and then you're very aggressively rude to other people who don't, pat you on the back and say you're doing a good job the way you're thinking. I mean, man, that's a rough life for you to live, right? I don't have a lot of respect for people like that. We choose how we interact with the world, right? Fortunately, internet makes most people act like they raised in barns, right? Brian Riley, what's up, man? He says, does October relief rally end in heartbreak for those not shorting the bounce or holding cash? You had to throw in or holding cash, didn't you? I think October is has the possibility to turn out pretty well. Not just October, but maybe in through the end of the year. I think it's too early right now to say we're definitely, a reversal rather than just a bounce. I mean, like I've talked about, I think there's a possibility we could be seeing a reversal and we get that new all-time high. But as of right now, it's way too early to know. So I think when you're thinking in terms of that longer-term trade, I think you really have to just look at the longer-term charts and then just understand you're going to have wiggle room in there, right? You're going to have an area, a cushion of that you have to get through before you kind of really start making decisions as to whether this is really a reversal or just a bounce. Now, it's a pretty sharp reversal. I'm not a big fan of really sharp reversals because usually they're just bear bounces, right? Usually, most of the time, if it's an actual reversal, it's more of an accumulation period. So at least with like the indexes, I'm not overly excited about the sharp reversal. I think we're up, what, 900 points the other day or whatever. But with the Dow. But, you know, we'll continue to watch as it plays out. For right now, whether it's a reversal or a bounce, you know, it should be upside, right? It should be upside for a bit. So I think, you know, if you're trading, there you go. If you're investing, you know, again, I think your time frame has to be, you know, if you're saying October, you know, you've got to get out to your weekly charts or something. And that, which means you're going to have a lot of space there that you've got to move through before you really kind of decide, right? So, yeah. Bamboo, what's up, man? Hope you're doing well as well. Yep, like Data says, you can be right or you can be profitable. It's your choice. It really is, guys. So let's see what's going on here. So Bitcoin, I've got my two charts here. You know, if the June low was the low, I'm still holding on to that possibility that it may have been, right? Then we've got this black count here, which suggests we stopped about $100 short of the target. It looks like we're probably done here. We want to see a breakdown below, oh, what is that? Probably around 19,912 and 10 cents here on Coinbase to kind of suggest, okay, maybe wave one is done. Wave two, in either case, should pull back toward this kind of, I think maybe this, see this wave four triangle here, this wave four area? This is where that wave two should pull back to. So if we're done here, and we're going to rally up higher, that gets you, you know, 50 to 61.8, right? 19,585 to 19,427, that kind of area. But ultimately, I believe, you know, whether this bearish red count or this bullish black count is in play, I think we've still got higher up. Now, obviously, if we drop down below this swing low over here at 18,923 and 81 cents here on Coinbase, if we drop below that, then that, you know, it says, well, the black count's probably not going to play out, right? But let's look over here. So here's that bearish count, right? And that bearish count, we're still looking at the possibility that we've got maybe like this ending diagonal going, right? Except now with the breakout above this swing high, we were looking at maybe like wave two, wave three, and then ABC is wave four. And so right now, it's still possible, ABC, so this could be a 1 with a really deep 2. If we break out above this swing high here at 23.83 and 15 cents, then this count is what's likely playing out, which I think sees us probably getting up here around 21,000, 21,200, which is this R2 pivot. So I think we, you know, kind of look at that. But if we do reverse and drop back down below wave B without breaking out above here, then this says, you know, this is 1, 2, 3, 4. We have 5. But, you know, again, for an ending diagonal, this is really odd. So I would expect that we're probably heading up here. So, like I said, whether you're bullish or bearish, I think we still have some rally up toward that area. Now, I think if we do that, well, let me see here. I don't know. You know, this could be, I don't think that's a flat there. You know, it looks like we got a 1, 2, 3, 4, 5 here. And then right here, we have 5 up. I mean, so technically, we've really done enough for wave C here to be done. 1, 2, 3, 4, 5. You know, that's that black count potentially to be done. So, you know, we'll have to see, you know, do we just get that pullback and then that breakout higher, or, you know, or do we just kind of keep breaking down below wave B, which is still that, you know, on the black count, it's still that same 18, what is that? 18,923 and 81 cent area. But again, I think even if this bearish count is correct, I don't think we've got a strong push down for wave 5. I think we kind of dip below, and that could be $1,000, you know, below that June low here. But I think, you know, we do that. We just, in terms of this here, we print a spring, right? I think that's potentially where we're at. Now, you know, so I've got this larger count going in here, right? We've been looking at this. You know, the idea that maybe we've got this WXY here. Now, if we do dip down there, that would suggest to me that this 3 is actually over here. So we get 3, we get A, B, and then C as this large expanded flat. Now, my only thing about that is I'm not really excited, that we're up like less than 10% on the rally here, above that wave A where it would begin. I would have liked to have seen it rally up higher. But, it broke out there, so I guess we could see this continuing to come down a bit. Overall, I don't at the moment think that we need to get down, below 14, 12 or whatever. Now, that can change as we break down, obviously. And if we're doing that, again, we've got some support right here, about 11.8, 10.4, and about 9,400 or so here. Those would be areas that I would be really kind of interested in just in general if that were to happen. Now, the other possibility is something I've talked to you guys about. What if this is just wave 1 and 2? Instead of, because remember the other possibility is this is wave 5, right? So overall, this is 3, this is 4, and this is 5 from 2010, right? We're 5 waves up, and in that case, we should be going down below 10. But what if this is just 1, 2 of 5? What if this is 3, this is 4, this is 1, 2, 3, 4, 5, right? And so what if this is 1, 2 of 5? Now that fits with that other narrative there with the indexes I've talked about, previously, which would suggest maybe the all-time high, again, is just, wave 3. The pullback is wave 4, and then we have 5 waves to go up, right? That would be similar with what we'd see here. So, I mean, there's something to be said for that, right? So we'll see what happens. There's we're just sideways here, guys. We're just sideways here. Since June. So is that July, August, September, going into October, going into 4 months, right? So yeah. Right now, we've got higher lows. We've got volume in this area, which even though we went down a little bit lower here than here, effectively this is sideways. Effectively, we're just base building right here. This area right here is this support resistance level. So if we break out impulsively above that, we should rally up to the R1 here. That's 22,000. I mean, if we take everything else off the chart here, and we're just looking at these pivots and this price action structure here, if we break out above this 20,003, 20,400 area here, we should do so impulsively. And if we do that, there's nothing really. I mean, I can see maybe, like this area right here, maybe finding resistance around 21.2. That's a target I'm looking at, right? But I think ultimately there's little reason to believe we shouldn't be getting up here to the R1. And if we do, based on trading pivots, when you come in sideways between your S1 and your pivot, and you don't come test that S1, but you just break out above that swing high at the pivot, and you hit that R1, usually you're there, you pull back to the pivot, and you break out higher and continue rallying through all the pivots. So forget Elliott wave, forget what you think needs to happen. Just, trading pivots now for a few decades. And again, I did that just traded pivots for a few years. And one of the things I learned was what I just said there. So if we do break out here, we should target the R1. If we target the R1, most likely this area up here, we should pull back toward this pivot area and then break out higher. And if we do that, there's no reason you should be thinking this is the bottom, or this isn't the bottom here. At that point, you should be looking minimally up here. Minimally. And so, again, if you don't like Elliott wave because you don't understand it, because you've never really taken the time to learn it and practice it, and you think, it's just subjective and whatever, it's not really if you do it correctly. But if you think that, you don't have to look at it here. If you think Wyckoff doesn't work, you don't have to look at it here. But using pivots, it's just another way to look at it, and generally that's the kind of movement we expect. So if I get what I'm expected to get with that, then there's no reason we shouldn't be up here and then higher. I don't think it just ends there. I think at that point, We're headed up. But if we do break down, again, right now we've got this ending diagonal. Right now, here's the other thing. The other possibility here, let me see here. Is it this one? No. Let me see here. All right. This one maybe. Yeah, this is that potential where I was looking at the potential that we get a dip down and a breakout here. It's still not the same. Where's the right chart here? Got so many Bitcoin charts. Here we go. Here's the other possibility I could see. I could see potentially if we break out above this swing high and then above this one here, that doesn't automatically mean that the black bullish count is the correct one, but it does mean that that ending diagonal is no longer valid because this is wave 2, right? This is 1, 2, 3. So if we break out above wave 2, well, that invalidates it, right? But we could still potentially be seeing this, say, wave 3, and wave 4 is a triangle here. And then wave 5. But here's the thing. Even with that, wave 5 should be a thrust down out of that triangle. And again, I think it just becomes a spring down below this range low and closes, rallies right back up, traps all the breakout traders, takes off, right? But if we do, you know, again, break out this one, our next target's that one, and if we break out above this one up here, this is that 25,215 area. If we break out above that, well then you don't have a whole lot in terms of bearish counts to really kind of be, I mean, you can probably, you could maybe say A, B, and then C as a flat maybe, get a little bit above here. But again, I think once you're up into this range up here, especially if you peak out above it, you know, I think any bearish counts you have really are just shouldn't even be entertained anymore at that point. But that's a lot getting up there. I'm not saying that's what's going to happen right now. You guys know where I've bought. You know where I'm in. I've shown you guys. But, you know, if you're looking at this and you're a trader, you don't just blindly ignore breaking out here, here, and here. Just because you think it should go down, or you know your money is that it's going to go down, you can't do that, right? You guys know where I've bought, right? You know these couple of places I've bought. I've already showed you. So, and I've got counts that show both ways depending on where we get through. You know, do we lose support? Do we break out through resistance? And then what's that next step beyond that? Just because I bought in doesn't mean I'm just going to hold it even if we're dropping down to 10. I mean, it's stupid, right? We can't be doing that, guys. We're here to make money, right? So yeah, so I think, you know, right now it's this area right here. If we can break out, we should break out impulsively. If we do, right, then we should target up here. If we break out above here, well, then we've got our target up here. If we break out through that, well, you know, then we're looking up here, 30.5 to 31. Maybe even breaking out right above the swing high up there, 32.5. I mean, it's you don't have to worry about all the lower time frame stuff. That's all you're looking at right there. Those are those levels that you need to pay attention to. And the more of those levels you break out, the more likely it's going to continue to that higher level. Just like checking off boxes, right? But if you can't, and you're losing support, well then you're looking further down. It's that simple, right? It's not easy though. Let me see here. Chris S., what's up? He says, Kiss of Death confirmed, plus SPX following, 08 fractal, exactly, scary. Kiss of Death, I don't know what you mean, but there are no confirmations of anything in trading. Are you talking about like some kind of like some kind of death cross or something? Because man, oh man, you know, those things are most often, well, you know, they're lagging things, right? They're lagging indicators, right? Death crosses and golden crosses, right? I don't put a whole lot of thought into them, honestly. A few decades of doing this, they haven't been very consistent at all. Because they are lagging. They're lagging indicators. So oftentimes when you get the, you know, the death cross, the bottom's already been put in. It's just been going sideways. That's what gives you that cross. Right? Let me see here. The 21 EMA on the monthly. What about it? You got to use a few more words, man. I'm not sure what you're trying to say there. I don't want to have to guess and you know, waste a lot of time misunderstanding what you're saying. Let me see. Let me kind of capture with you guys here. Kimazabi, what's up? He says, outlier idea. How about Bitcoin has been in wave 4 correction since December of 2017? No, that's what I was looking at first. That would be really, really, let me see here. Since you're saying December to right here, right? It's to be flat. Nah, that's too far up. Your multiples above your all-time high there is multiples above that previous all-time high, right? So this would have to be ABC, and this would have to be ABC, and then you'd have to have 5 down. But you're talking at 19,000, or we'll say 20,000, keep it round, right? Versus 70,000. You're talking about 3.5 times up. It shouldn't be that large. Generally in a flat type, expanded flat type correction, you're looking at about, maybe 1618 at the most. But you remember the 1618 extension is a wave 3, right? You shouldn't be getting up that far. You're usually looking around 123%. 115 to 123% if you're looking for an expanded flat. And so this is obviously significantly higher, right? So that's the expanded flat was what I was looking at when we were doing here, and I was talking about, in this area here, I was talking about, well, we could see some breakout toward here, but I said, but if you're hitting, 28, 30,000, most likely it's not going to be at all, and it's going to be, we're going to continue up higher. It's just that, this is the bottom, and then we're heading up, right? So that's what I was looking at over here. And I said, okay, but we're going to need breakdowns through certain levels. But if we get through, again, 30,000 or whatever, that'll be too much. That we should generally expect it to continue higher in that case. And that's what it did, right? So yeah. Let me see here. High Power Coach, what's up? Says, I used to understand 0% of what you're saying, but I kept watching. Now I understand like 30%, but that feels good. I'm learning. All right, great. That's the thing, guys, about trading. There's a lot of stuff, and I tend to talk about a lot of different things because I happen to have a lot of education, a lot of experience in multiple areas, right? So everything from macroeconomics to global finance to multiple ways of technical analysis on the charts, right? And so, and if you just keep coming back, you'll get used to it. It's what we kind of do with Discord. The idea is, so when I was in college, it was this idea that you could have, let's say you were learning Spanish, and you could go spend a semester in Spain, right? And basically you're dropped off in some Spanish town where everybody basically speaks Spanish, right? And so you're forced to learn it, right? You're forced to learn the everyday thing. And that's kind of like a lot of the way that we do with Discord. It's you drop you in there, and at first, if you don't know a whole lot about trading, it's like, oh, what are these guys saying? But you sit there and you keep watching and you keep paying attention, and then you start picking it up, right? And to me, that's that kind of dropping you in there doing is the absolute best way to learn. Now we still, go over basics and stuff to help you get there, but if you're surrounded by the talk, right, all day long, you pick it up, and you pick it up a lot better, right? Which is why they have those immersion programs, right? Same kind of idea. But anyway, glad that you picked it up, some of it. Let me see here. Amdu says, the kiss of death is a monthly rejection off the 21 MA. Oh, you're saying the MA on the SPX and close below the prior low. Oh, you guys are looking at, okay, yeah, same thing happened in 1929, 1969, 1970, 2000, and 2008. Yeah. So, yeah, potentially. Sure. I've been talking about the last few years that we potentially reach that top up there, right? Would be the NASDAQ in November, and then the Dow and the S&P there in January, right? But I'm not one of those people that follows just one thing. I don't believe that you can look and you go, well, every other time it's done this, so it's going to do that again, right? Because if that's the way that you view the markets, well, then necessarily Bitcoin can't be topped out, right? Because every other time has been this kind of blow off large rally top, right? And this time it's not. So if you think that with the SPX, right, that it's always done it, so it has to do that this time, well, then you necessarily have to accept that Bitcoin can't be topped out at this point because we didn't get the same thing we had every other time at the top, right? You can't just apply it to one and then not to the other, right? The way we think, right? You have to be consistent as a trader, because your issues come when you say one thing about, say, one market, and then you don't follow that same thought process with another market. That's where a lot of traders end up losing a lot of money, because they're not consistent across markets. If you have a trading, and you should, a trading system, right? It's all about the system, not the profits, guys. If you get a system and you work the system, the profits come, okay? But you have to be consistent with that system. So, I mean, I'm looking at you guys, and maybe you don't trade Bitcoin, maybe you don't care, right? But it begs the question then, again, if your idea is that it's always happened this way during these same events, so it's happening here, so it's going to do the same thing, well then you have to translate it to what's going on with Bitcoin, right? Every time before, you have this rally here, right? This time we didn't. Significantly different, right? So yeah, let me see here. All right. Is that the Texas A&M National Championship case behind you? No, no. I'm not an Aggie. I'm a Red Raider. I went to Tech, went to law school over there. So, but yeah, there's always follow through. You always have to have follow through, whatever you're looking at, guys. So if you think that pattern is there, well, it's not confirmed yet unless you have follow through, right? Because otherwise you get caught, right? You always have to have follow through. Whatever you're doing, whatever system you're trading, there should always be that. Well, I've got the setup, and then I need the follow through, right? It's what we talk about with Wyckoff all the time. It's all about price action and volume, and price action and volume can look like distribution at one point, but if there's no follow through lower, if there is no follow through beyond that setup, then it's not, right? The market comes back and says, not today, not on my watch, and takes it back up, right? Yeah. But yeah, I'm not much of a moving averages person either. I wish I had the link at the moment here. There was some studies that were done about the idea that moving averages aren't as profitable, we'll say, as they used to be, because of the high frequency trading going on now, where everything's computerized with price levels and whatnot. And so I'll find that sometime and I'll post it. But yeah, it was a pretty intriguing thing, and it showed how moving averages were pretty profitable, say 50 years ago. But since the 2000s, basically, high frequency trading really kind of came in beginning of the 2000s, 2004, around there, really was in. And now, that dominates a lot of the trading. So, moving averages, which are based on sentiment, right? How the market's feeling over time, right? Tend to be a bit more iffy now. So I'm not a big moving averages person, personally. Yeah. It doesn't mean that somebody's wrong for watching moving averages. I'm just explaining why I'm not a big moving averages type person. It's not just because, I don't like it or something. But yeah, so I mean, it's we've got potential double bottom here, right, guys? Potential double bottom. Adam and Eve, maybe, right? Adam and Eve. So, if we look here, again, if we look at things that have always happened previously, well, the last few times where we've actually had, it's a little bit harder with Bitcoin as far as what I'm about to talk about, because it's moved a lot in a short period of time because it's new, right? It doesn't have 100 years of experience there, right? But we've hit oversold here on the weekly RSI in 2018 bear market low and the 2015 bear market low. And in both those times, ended up overbought with, or up to that overbought area here with the Stochh RSI. Kind of did the sideways, and then broke out, right? So kind of same thing we're looking at here, right? Oversold, overbought area, sideways, pullback, breakout. There's a lot of this looking, quite a bit like this here, right? And depending on which one you look at here, Bitstamp or the BLX or whatever, these two lows are going to be a little bit different. But overall, this was the low, that January 2015 kind of area. And then you had your December of 18 low here. And both times, of course, oversold there on on the RSI on the weekly. And so we just hit that again. Bitcoin's hash rate, I believe, hit all-time high, right? So we've got that. I guess you can't use dark mode with black candles. Nah, you're going to get kind of caught on that if you try to. You could use potentially different colored candles, obviously, working with that, right? The other thing I like to look at is, if you're looking at the awesome oscillator, we've got twin bullish peaks here, right? So you got a peak, and then you have a higher peak here underneath the zero line. That usually indicates that price is going to rally, that it's a bounce at least, if not a reversal, that takes it above the swing high here. So we've got that kind of setting up there on the weekly as well. I know I'm not telling anybody what they want to hear. I know people hate it. They want me to be bearish as heck because everybody's bearish as heck, and so they don't watch because they're bearish as heck, right? But here we go. So other things we can look at here, right? We've got this trend down here. Now, usually you want to see this at a low, but it's coming right off the low here. You got this, not a reversal hammer, but you've got what's basically just like this doji here with this large upper wick. And usually when you get that at or near the low of that downward move, usually it indicates you're going to rally up higher. The idea being that you rallied up and you cleared the way, got sent back down, and then here you come up and follow through with it. You can look here at the volume and the price action here. Slightly more volume than that week before, but a flip. We had a supply in control here, and then we had, demand in control here. And here we go this week. So a lot of different ways you can kind of look at the chart and kind of get some idea that maybe something less bearish may be happening at the moment. But again, it doesn't mean that it can't go down lower. I gave you those, if you're looking at LE wave counts, possibilities, right? We can break out a bit higher here, still have that ending diagonal. If we break out above this swing high, we can still have a triangle. If we break out about this one, maybe you're getting ABC, ABC, and then 5 up for like a flat. But I think once you're getting into, again, this kind of 30,000, 31,000 kind of area, I think at that point it's all but guaranteed that the bottom's probably there. You're heading up. Again, we've looked at these two capitulation events here. If you guys don't know what capitulation is, this is what they are. Okay, you got to look at how huge that volume is. Large lower wick, right? So demand shows up, rallies back up, but comes back down, right? Retail capitulation, 3 arrows capital causing Celsius, Voyager, all that capitulation here. Bad debt capitulation, basically. Over leveraged capitulation is what that ends up being right there. You can see that we've got, again, volume building up right here. Kind of base building, it looks like, right in this support, right in these areas here. So, I mean, you've got a lot of reason to think that maybe the bottom may be in, but none of that guarantees it is. But you shouldn't be thinking, oh, we definitely have to go down when you're noting stuff like this. I think it definitely gives you the possibility that it goes up instead. And with the market, with everybody being so bearish and, it's got to go down, well, I mean, that's the perfect setup, right? It's usually what we look for. So we'll see. We'll see if we get that. Michael Otis, what's up, man? Monthly RSI bull div possibly confirms this month. Unsure, but hidden bull div from 2018 also. Let's see here. Let's see what chart you're looking at. Monthly RSI bull div. Well, on Coinbase, it's a higher low. This is a higher low here on Coinbase. And then I think you're looking at this right here, right? I'm not a big fan of this as hidden bullish divergence because you have this large rally, large pullback, and large rally up. So to me, it's like these two lows right here, and then these two highs, and then these two highs, and then you have these two lows, then you have these two lows, you see? Now, maybe we can go in here and say change this to 3 months. We do it quarterly. Okay, quarterly. I would be better on quarterly here. Still a little iffy because of this point right here. Yeah, I mean, what I can say here is what I would notice is that we definitely have RSI, we have demand momentum picking up. We definitely have it picking up on the higher low here, even though RSI is pushed lower. I think I would stop just short of saying it's hidden bullish divergence though, because of this big dip right here in the middle. So again, to me, it would be, you know, this point to this point, right? And then this point to this point up here, which isn't very clear up here, right? But then we'd look at this low, and you know, in that point, RSI is just agreeing with price action, I think. Higher low, well, no, it's not just a higher low on the RSI. You want to make sure that there aren't any significant peaks and valleys in that RSI and price. And that's my issue here. That's a significant pullback here, right? You went up here from, oh gosh, whatever that was, 62? Was that what that was? 64.5 down to, you know, 28.9, right? So that's a 50% drop. That's significant in here. So to me, that's the bottom, not this one over here. That's that one. So you're going from this low to this low, which just confirms, you know, what you saw there. And then you're going from this low to this low on the next one, which again just confirms that direction. Yeah, yeah. But on the monthly, you're still having to skip right here. Right here, this is a higher low, right? So if we look here, this right here is 49.69, this one, or 41.69, this one's 41.88, right? So 41.69, and then higher here to 41.88. Price, you have your low here at 17.567 and 45, and then you have your low here, which is higher at 18.153. So all you're getting is a confirmation, a higher low with your oscillator and a higher low with your price. So all you're getting is a confirmation on that. Yeah. So yeah. But like I said, I think there's a lot of reasons, as I've been talking about here, to consider that that it's possible that maybe this bottom may be in here, right? But we need steps. We need work to do, right, to confirm that. I'm never the guy here that says it's definitely a bottom, it's definitely a top. I say, here's what I think, here's why, here's the next steps, right? Because as a trader, I think when you're out there trying to guarantee, you're really putting yourself at a big disadvantage, right? Because if you say, listen, it is this thing, then your mind closes to other things that may be going on. And as a trader, you have to be fluid. You have to move as new information comes in, right? So that's what we're looking at. Let's see here. So yeah, so right now I think we get a pullback. Whoops, hit the wrong button there. Let me see here. All right. So yeah, I mean, I think we, more likely than not, I think we pull back toward this support right above the pivot here, and then we look to breakout. If we do that, then we got the R2 here, and all of a sudden it starts looking, I mean, you know, still potentially just this wave 4 up here, but now we're above that daily pivot. So if we're breaking out and pulling back and we find support on that daily pivot, which is just all this support resistance here, so we break out there, we pull back to it, we come back, I mean, and we break out higher. I mean, at that point, I don't think there's a lot of thinking about that red count as it sits there. But, you know, again, we need confirmation on the breakout above wave 2 here to invalidate that ending diagonal. So, yeah. Well, your line chart, if you're looking at your line chart, there's the problem with the line chart. The line chart doesn't give you all the information. It gives you closes, opens and closes. It doesn't tell you how far the momentum actually goes. It doesn't give you the highs and the lows of the candle unless they're the open or close. So yeah, that's the problem with using the line chart. You're going to get a lot of false positives on that, or even false negatives. I keep, you know, one of the things I think I've had to talk to people most often about is this idea of, are the wicks worth it? Are the wicks anything you have to worry about? I've had people turn off the wicks. I have people draw, you know, support and resistances ignoring the wicks, because if they could draw it through it, then what they're saying makes more sense, right? But the problem is wicks actually have a ton of information, right? I mean, they tell you that momentum was stopped at that area, right? That's significant. It didn't stop over there. It stopped down here. It didn't stop right here. It stopped up here, right? And so in the grand scheme of things, when you're especially if you're trying to scalp or trade just shorter time frames, those wicks are very, very important. There's a lot of supply and or demand in those wicks, as well as, in clusters, right? And so, I think if you ignore the wicks, use line charts, whatever, I think you really just kind of set yourself up to have a lot more issues at the end of the day, But, some people do it. Some people do it. Is what it is, right? Yeah, no. Divs are best done with momentum, right? We're talking about momentum. I always struggle with trying, because people often think the same way, Michael, is that, that it's just based on the opens and closes. But if we think about it, this is a momentum indicator, right? We're talking about how strong is that momentum. And if we cut off the wick, that doesn't tell us how strong that momentum was in price, right? How far that went in price. And so oftentimes we can get those huge wicks like I showed earlier, right? That first capitulation on that weekly or whatever, that huge wick. You would lose all that. But that's significant because the momentum took it all the way down there. Just because it closed up doesn't make that momentum, that how far that momentum took it, any less accurate. So yeah, I think it's probably one of the better ways I can explain that. Is because when we're talking about divergences, we're talking about a measure of momentum versus what price is actually doing. So are we getting more momentum, but less, price action movement, or are we getting more, and how does that play out? Hope that makes sense. I think it's probably a pretty good way of looking at it. On the Bitcoin weekly chart, what are your thoughts on the increases of volume since the June low? No, I think I discussed that, didn't I? Yeah, so capitulation 1, retail capitulation, dips down below the swing low here. And this is what I said. If you're just doing line charts here, your line is going to end up here around 31.3, not way down here, 25. I mean, that's 5,000 on 30. That's what, 6%? Or a sixth? 6%. It's like 17%, right? You're going to miss all that. But yeah, no, I think that's retail capitulation. I think this is just bleed off of that that led to that Three Arrows Capital nonsense, which led to Celsius and Voyager and all them heading down. I think that's the deleveraging of those large over-leveraged institutional positions there, hedge fund positions. And that's what I think is there. Now, here, what do we actually have? We have a spike of volume right here, so it breaks out higher and hits here. Doesn't really do much. It stays at that same level, right? And then it kind of just goes sideways in this area right here. So yes, you get a little lower low, but really, you're just kind of, for all intents and purposes, this is sideways here. Now, the other thing we can look at, let me show you something a little bit better here. Look at the daily. Large candle spread, they get smaller, right? Volume picks up while your candle spreads are getting smaller. What does that tell you? If you have an increase in volume, but your candle spreads are getting smaller, that tells you you're exerting more effort and getting less result. That's the basis for a reversal, right? A trend is expanding candle spreads and expanding volume, right? So we would expect to see candle spreads getting larger and larger and larger as that volume's expanding there, but we don't. Instead, we see more and more effort, and you're barely making new lows. You got a lot of overlap, a lot of small candles. So supply is trying to push down, and they're barely making it any lower, but they're expending a lot of extra effort to do it. So this is, I think this ends up being more of base building here. So what do I expect to see? I want to see large candle spread, large spike of volume as we break out above this level toward here. And then when we break out here, I want to see the same thing. And so I want to see volume expanding up through here as we get through this area, and this area. And larger candle spreads taking it up. The range is this right here. Well, kind of this thing that I drew earlier right there. Locally, we've got this range right here, but it's really just part of this kind of ultimately sideways here. You're getting compression here, right? So yeah. Okay, well, your opinion about it should be off the close is what it is, right? I get that. But again, we're working off momentum. We're not working off the close-in price. So, think about it as long as you can. Keep going back. Hopefully it makes sense at some point. But remember, divergences, we're not worried about closes. We're worried about momentum and where that's taking price. That's what we're looking for with divergence. So, again, if you do that, you miss huge bits here, right? Look at this. Look at that. You don't get to see that the low is actually here. Instead, you're looking it up here, right? Again, here. You're not getting it that the low is down here. It's up here, right? But that doesn't tell the story. That doesn't give you the story. There is a lot more information in the wicks, I think, than there are in the candle spreads. Now, your candle spreads, again, when you look at them properly with price action, you get that proper relationship, and then understand where to look at it elsewise to compare it properly, you can get, information out of the candle spreads. But I think in general, I think you absolutely get a lot more information out of the wicks. Because let me show you this. If you see this here, you're immediately thinking you should get some kind of bounce, right? But you don't see that here. You would never understand that you should be looking for some kind of rally to the previous area of resistance, which is what you should be looking at when you have this kind of thing with this large wick here. I would venture to say 9 times out of 10, that's what you get. So there's a lot of information in the wicks that people ignore, and to their own detriment. And that's why, again, most people end up losing money as traders because they're not looking at it properly, or what I believe is proper. Something that's going to, and what I mean by proper is something that's going to increase your odds of making money and decrease your odds of losing money. Yeah. Excuse me. But yeah. I mean, so that's my, again, whatever, I've been doing this since 95, right? That's just what I've come to as my understanding of it. I've found that I'm a lot more correct than incorrect when I include wicks with my analysis versus not including them. It's a lot easier to get it wrong. And so not just with divergence, but just with candle structure, and as it is. And of course, the other way you can look at this is if you look at if you trade candlesticks, you look at bearish or bullish Haramis, 3 white soldiers, all these things, right? It all has to do with the candle spread and the wick, right? They all have to do with both of those things, not just with the open and close. So yeah, it just turns out a lot better. Let me see here. Razagal? Is that what that says? Or Razzagal? I'm sorry if I totally screwed that up. I appreciate your comment. Thank you. That's the goal. It's just trying to hopefully get, especially, non-inconsistent traders out of the traps that we often fall into as new traders. A lot of times we do lazy thinking. I did it a long time when I first started too. And just things like that. And so being able to kind of help us think more about what's going on there, to get more of an understanding of what we're looking at. I mean, that's my goal, because I'm a full belief that it's going to make you a better trader. Made me a better trader, right? Anyway, so that's that, man. Wow, we've been talking about Bitcoin a while. Let's jump ahead here, guys. DXY, look at that. Let's head down here. Now, it is possible that maybe this is A, B, and this is C. And if so, 109.634 will be equal to A. 123.6, which is often where we go. Even though we talk about the one-to-one relationship, often wave C goes to 123.6. So that's that 108.919. But if you're getting down here at 107.75, that's the 1618 extension. That's our minimum expected wave 3. That's right there around that Oops. Let me see here. Get this daily pivot thing. It moved on me again. All right. There, right? Now, the other big thing here is this, where we've peaked out so far, that is the EQ of this large time frame supply structure, right? So this is the one I was talking about way down here. You guys might have remembered. I said, well, we're going to look for targets along the way, but ultimately, as long as we continue pushing up, we're probably going to get up here around this 114, 115 area. And so, here we come, a year later, we've hit that area. Now, that doesn't mean that has to be the top. We could still push out a bit higher. You can see that the weekly R5 pivot is just up there around 115.87, right? So, it's possible that we could still hit that. Which means this count may be off here. Instead of a 3, 4 is a triangle, and a 5 here. Get back in here. It's possible maybe this is some sort of 3, 4, and then we'll have 5 up, right? And so that wave 5 target would just depend on how large this is as a wave 4 here. So let's say this was to be ABC done. I'd expect wave 5 to target up here around 117.75. That kind of area. Just based on the height of wave 4. But again, we're going to see. Do we continue down toward this target, or do we break out above wave 2? If we break out above wave 2, right now that's going to suggest this is an ABC. And then we'll be looking for, 5 points higher, that 117 level from 112.5. So yeah, I mean, it really is kind of as simple as that when I'm looking at this at the moment. As far as what we may kind of be seeing on there, right? Let me see here. Jake and Play, what's up, man? He says, the cable USD to the 1618 on wave 3. Let's see if we get a 5. Yeah, man. That cable's been a good play there. Everybody is talking about that reversal because of what the bank did over there, right? But if you're in Discord with us, then we've had a target down there, right? And it broke down below our low and then sharply returned, and we said, okay, well, that looks like that might be a capitulation event at the low there, right? And that would align with the idea that maybe the dollar's topped out. And again, we look at the UK central bank there, right? And what they've done, and we look at the BOJ and what they've done, and now we can look at Royal Bank of Australia and what they've done. And so remember, the DXY is just a weighted average for the Euro USD, the USD Yen, the USD Swissy, the USD Aussie, the USD Kiwi, and so each one of them has a certain percentage, right? So 58% of the weighted value of the DXY is the Euro USD. The next biggest one is about 12%, which is the USD Yen. And then I think we go to the I think after that, I think it is the cable at something like maybe 6%. So if you start seeing these banks, doing their thing and changing their favor of what's going on there, and so trying to defend their currencies, well, that necessarily is going to affect the average there that's going, that weighted average there on the DXY, right? It's going to exert some force on that overall DXY value. So yeah, so I think there's a lot possibility going on with that cable there, potentially heading higher off that. So yeah, but yeah, so this is kind of where we're at here. I'd like to see a move down here to 107.75 to really kind of say 1, 2, 3. That looks good then 4, and we'll get a 5 down lower, and that gives us a 1 and a 2 and a 3. Because again, guys, if the dollar's topped out, if it's fallen off, it takes a lot of downward pressure off risk-on assets, right? And what would it mean? People are going away from the dollar, going into other things, right? And if they're doing that, that usually denotes risk on. So we should expect money then to also flow into, equities, crypto, stuff like that. But again, it's all in steps, right? It would be silly to say, oh, the top's definitely in. You're either right or you're wrong, right? I mean, it's just taking a chance, right? Taking a shot in the dark. As a trader, you never want to do that. You want to say, okay, well, I think it may be in, and here's why I think it may be in. But if it is, then that means that we need to get down through this other level, right? But if we happen to go above this certain level, then that invalidates what we're thinking, right? In this case, it is wave 2 up here. This 112.673. If we're to break out above that, the idea that this is a 1, 2, 3 is no longer valid. And that increases the odds significantly that we head up there toward 117.75 or even higher up. Yeah. So that's what we're kind of looking at there. I guess let's go ahead and pull some stuff up now. Oil. Man, oh man, look at that thing going up there. I've got that on that wave 3 toward a minimum expected target at $90.81. Not a whole lot going on with oil that we didn't already expect, right? It's been a long, we talked about the top probably being in up here back in March. Then we came rallied up, so give us a 1, 2, heading down, right? We're getting toward this area of support, this high volume node down here. But, you know, we've got room to go. We got room to still go further. We do have overlap here, so we shouldn't expect just a strong drop through it. We should expect some work through it, right? But, yeah, nothing really happening differently there. Daily, we're overbought on Stochk RSI, but we got room here on RSI to continue up higher there. We are above the daily pivot, which suggests we should head up higher there. Again, I'm looking at this right now as a 1, 2, 1, 2 potentially, right? So we may be looking up here. Like I said, around that 90.81 is where we're looking currently. But this could be A, B, and then 1, 2, and then head lower. Now, that's just initial target where we're looking right now. We could, you know, again, that's just wave 3 right there. And so this is 1, 2, 3, 4, 5. So that would be an A, then we get a B back, and then we get a C higher, right? So we should end up higher overall. But yeah, I mean, there's where we're kind of sitting. Nothing going on with crude that we weren't already expecting, just following along what we've been looking at all year. Natural gas. Possible triangle going on here. We've got the double bottom right here. We've just about hit that target there at the 4-hour pivot. So I'm kind of looking at this like this. There is no guarantee that this isn't 5 already up here. Okay. So what will we need for this to be 5? We need a breakdown below the swing low here. So yeah, if we're going to break down below that, that would suggest that this is it. But then this kind of leaves this, and we go, well, what is the count here then, right? Because you've got this, you've only got this one deep pullback here. So it looks like, you know, a WXY, ABC. It just looks like a 3-wave advance there, right? So we want to see, do we get that breakdown below the swing low there? Right now, I think we still may have a bit further up. So again, potentially a triangle plane here, in which case we'd have 3 up to D, 3 down to E, and then thrust up probably around $12 or $13 maybe. Maybe even 15. If we get that, if the top is not in here. The only so if we zoom out a bit more here and just try to look at these big moves, the other possibility is that maybe this is an ABC. Oh, I'm sorry. ABC is 1, 2. ABC is 3, 4. ABC is 5 as an ending diagonal. And so that's, again, if we're dropping below this swing low here at $5.32.5. If we're dropping down below that, I think this ends up being an ending diagonal here. Just based on these larger, you know, zoom out a little bit. Just look for your larger movements in there. Yeah, again, could be just ABC is 1, 2. ABC is 3, 4. ABC is 5 here potentially. And then, of course, just coming off that. So we'll see how it plays out. We'll see if we can get that lower down there on there or not. But yeah, nice aggressive move there up that swing low. So looks like we should be. We're looking for a breakout above 77.139. And that should carry us then. I mean, I could see us potentially getting stopped around 7.85. I don't think so, though. I think maybe we head up higher here toward around 8.47 maybe, or even 8.75. I think we get up closer to that area maybe if this is a triangle, and then 3 down maybe toward this 7.5 level, and then up. Even though I have it down here, I've just got it drawn on there real quick. So yeah. If we're looking at the indexes, right? So NASDAQ Composite, we had this nice big gap up at the open, broke out above the daily pivot, being rejected, pulling back down. You know, this right here, right now, we consider this a island reversal. It's an island reversal because there's a gap here on the drop, right? And then there's a gap in the same exact area on the move up. So you have a gap over a gap. So if we leave those, if we leave a gap here, I mean, it can come into it. What you're looking for is a gap to be left here on both sides of the same area. If we can get that and this thing rallies up higher, this is a rare kind of reversal. It's called an island reversal. So we'll see if we can do that. Breaking out above the swing high should get us up here, immediate target right around 11,490. If we can break out above this 11,600 and some change here, that should have us rallying up toward 12,217. That's kind of the path I'm looking at right now. And so, you know, the other two kind of the same way. Let's see here. The Dow. Again, another nice gap up, followed by a large rally into the previous area of resistance here, right above the daily pivot. Starting to pull back on it. No island reversal here. I don't think so. This is basically the highs around the low. Maybe a bit of a little gap right there, but I don't know that that would really hold. But yeah, so, you know, coming up there, looking for that, pulling back. If we were to break down below swing low here, wave circle 3 has a minimum expected target of 27,759 and 95.95. But, you know, again, if we break it above the swing high here, we should go toward that 3771 area. If we can break out above 31,020 here, we should rally up to around 32,242. If we do break out above this swing high here at 32,504.04, that'll definitely invalidate that black count there coming down. Let's see here. E-minis. Oh, where are we at here? E-minis. All right. Again, same idea. Nice strong rally off the lows. Peaked out above the daily pivot. Pulling back now. So we should expect a pullback. My expectation would be a pullback into this 3670 to 36 kind of 90 area. So I would expect to pull back to there and then a rally and a breakout above there. If we can get that, we should rally up here toward this blue supply structure around 4165. If we can break out above that swing high of 4175, this count here is invalidated. You know, and then we'll try and figure out what may be going on. Breaking out above there, I mean, maybe you can get a 1, 2, 3, 4, 5, but that's a very short 3. I mean, you've got 3 and 5 before you even hit your normal wave 3 level there. If we measure this out, I mean, see, that's the 123. That's the 123.6. So I think, you know, maybe there's a possibility this is an ABC for a W, ABC for an X, ABC for a Y. And guess what, folks? Maybe hit up higher. So the key level you want to watch is this 4175. And if you break that, I think there's a good chance you break this swing high up here. Now, the other possibility is maybe this is ABC is A, ABC is B, and then we have C going up as a flat correction for wave 2. That's possible. And in that case, I think, we'd probably target probably this kind of area up here around that 45 to 4,600 area. I think it'd probably, again, it'd be ABC up for A, ABC down for B, and then 5 up for C. But once we start getting closer and closer to this 4,700 and then a swing high up there, I mean, really starts looking like maybe this is ABC, ABC is W, X, ABC is Y, so it's a W, X, and then a short Y here to just get us a wave 4, and then wave 5 is still undone, going to be up higher. And on the grand scheme of things, it starts looking like maybe like a double bottom, potentially. But nothing's happening at the moment here that says that has to happen. I'm just saying these are the levels you need to watch. If you're breaking out them, you look at that next level, and once you're getting out above this 4175, that opens up the case that at least we're going to rally on up to maybe 4600 and complete wave 2 then over there as a expanded flat correction. But if we keep going up above 46, 47, and then all of a sudden it starts really looking like this may be wave 4 done, and we're heading wave 5 up. And so, if we see it with, E-minis or with the Dow or with NASDAQ, I mean, you should see the other ones following with it as well. And if that's going on, again, the only way I think that happens is if the dollar continues to come down. So that's why we continue to watch the dollar, right, guys? Yes. Let me see here. I'm almost done. Let me just pull up some silver here real quick. Look at that move. So, we've got our count going on here. We've got potentially a wave circle 3, minimum expected target of 21.125. We're getting pretty close here. Yeah. This may be getting around that wave 3 of 3. So we might see a pullback and then breakout head higher to that wave 3 there. And so we've got that. And if we look at gold, gold rallying, really well, same way as well. We've got a wave circle 3 target, minimum expected up there at 1766 and 10 cents. So again, could see a potential pullback here a little bit, and then rally up higher to finish that off, and then pull back again for 4, and then we get 5 up higher, and then that gives us a 1 or a 1, 2, 3 maybe going up. We're looking at this as a large flat here. So A, B. So C should be, at least up here around 1887 or so. Quite possibly even higher, as you can see here. Remember, we got a 1, 2, and looking at it coming down here again. We'll see, what kind of reversal we get. But so far, price generally doing exactly what I've said here, more or less, since where did I first time? Right here around 2018. That's when I started talking about it, right? And so we got the rally up, and it went a little bit higher than I thought, but we still got the rally up. We got the breakdown. We got the rally back up again. We've had the breakdown since. So we've been doing good on a macro look at gold for a while now, for years now. So we'll see if it continues to pull out. It doesn't have to, to end as I expect. But, we've got those validation and validation levels. As price action plays out, we'll keep playing as we go in, right? I'm not talking about investing. I'm talking about trading. And so if the information comes in, the information on the chart there, and it's different than what it should be in order to get where I'm looking, then unless there's some alternate, potential count in that same school of thought that goes that way, then, price is going the other way. And that's okay. I don't care if gold goes up or if gold goes down. I just care that I understand which way it may be going so I can make money. And, so that's going to do it here. But I think that's a great place to kind of leave this, guys. Too many times young traders come in here and they're more worried about being correct than making money. I don't care. If I'm wrong, I'm wrong. That's okay. That's why I have invalidation and validation levels, guys. Lets me know if I'm more or less correct than what I was, so I can trade appropriately. I'm not here to tell you this is definitely going to do that and that's all there is to it, so that you can go rah rah, you know. Because you're not going to become a better trader if I do something like that. It's not how you trade. That's silliness. That's silliness that people that are just looking to impress people try to do out there. And they're wrong more often than they'll ever be right. And they tend to hide a lot of when they're wrong. Instead, you get up and go, listen, here's my idea and here's why. But along the way, I know that if it drops below this level or breaks out above that level, then either it'll be validated or invalidated. And it doesn't matter which one it does, because either way, it gives me more information so I can put in a better trade. But you got to do proper risk management, guys, okay? Proper risk management is what it's at. It's the heart of trading. That is the golden goose, the secret sauce. That is what trading is all about, proper risk management. All right? All we are doing is trying to lose less than the next guy. And if you think that way, you're going to have a lot more money coming at you than what you're doing right now. All right? As always, remember, the only thing you control in the market is how much you lose. That's it. Nothing else. You can't control what the market's going to do. You can't control whether you're right or wrong. But you can control that if you are wrong, how much are you going to lose? And that's why it's important, all right? I really appreciate you guys showing up as always. I know it's lengthier than most people's streams and whatnot, but I honestly think that if you're here and you're really listening, you're going to pick up a lot of information that people are charging you a lot of money, even myself, for out there. But you got to pay attention. You got to be open to listening and understanding and thinking maybe you might not be right in the way that you view things. I'm always looking to learn myself, guys. I'm not going to tell you that I know exactly how to trade the markets 100% perfect. Nobody does. But I'm always trying to learn more and more and more about markets and different ways of looking at them. So I hope you are too, okay? All right, guys. Y'all have an amazing day. Have an amazing week. Like I said, I'm going to be at Web3 Expo next week. Let me see here. I actually have Monday, October 10th. Let me see here. It looks like I had it in there. I don't look like I can find it. I think I'm going to be like around 11:45 a.m. to 12:15 p.m. Wolf of Wall Street stage, I believe is when it's going to be. I'll be doing my masterclass, and then I'll be on a panel with Crypto Burb and I guess Scott as well there later that day, 4:45 to 5:15 p.m. I'm getting a few invitations to join a couple other panels, one for Fox Business, I guess, and something else. So if I agree to do any of that, I'll let you guys know about that as well. But man, oh man, if you guys are going to be there, hit me up. Let me know. I'd like to meet you. I sit here behind the screen all the time, never get to meet anybody. So I think that'd be kind of cool. All right. Name Mr. Wilkes, good to see you. Kimo, I appreciate your kind words, man. I do. I hope you guys have an amazing week. Y'all trade safe. And man, I'll see you guys on Friday at 11 a.m. Central Standard Time, all right? If you're in Discord, I'll see you guys over here in a bit. Take care.